Imagine waking up one morning to hear the president announce that income taxes are completely canceled. For many Americans, it sounds like a dream come true. More money in your pocket, extra cash for investments, savings, or just enjoying life. But before you start imagining your next vacation or a bigger paycheck, it's crucial to understand whether this is actually possible. Investment. Could a sitting president simply wipe out income taxes? Or is this just political theater designed to capture attention and votes? Today, we're going to break it down step by step. First, investment. We need to talk about what the president can and cannot do when it comes to taxes. In the United States, Congress has the constitutional authority to impose and change taxes. Investment. The president may propose changes and advocate for policies, but ultimately any law that affects income taxes has to pass through both the House of Representatives and the Senate before being signed into law. Investment. This is a critical distinction because it limits the president's power in a very real way. Even if the president issues executive orders, those orders cannot override existing tax laws. Investment. Executive orders can direct federal agencies on enforcement or priorities, but they cannot legally eliminate the requirement for Americans to pay federal income taxes. Think about it like this. The president can influence how aggressively the IRS pursues certain types of taxes, or perhaps delay some enforcement temporarily, but the law itself remains intact unless Congress changes it. Another important factor is the constitutional amendment process. If the proposal involves radically changing the structure of taxation, such as abolishing income taxes altogether, it may require changes to the Constitution itself. Investment. That means approval from 2/3 of both congressional houses and ratification by 3/4 of the states, a process that is politically and practically daunting. In short, while a president can make bold promises and advocate for tax reform, there are very real legal checks in place. Without Congress on board, the idea of a president unilaterally canceling income taxes is essentially impossible. Understanding this legal framework is key to separating political rhetoric from practical reality. Looking back, investment. There have been attempts to reduce or modify taxes, but the results show how complicated it is. Presidents like Ronald Reagan and Donald Trump in his first term advocated for significant tax cuts, but even those cuts had to go through Congress and involved careful negotiation and compromise. No president has ever outright canceled federal income taxes for all Americans. But the closest historical example would be temporary tax relief during crisis. For instance, during certain recessions or wartime periods, tax credits, deductions, or temporary reductions were offered to stimulate spending. But these measures were temporary and limited in scope, never a complete elimination of the tax system. Even proposals that sound bold on the campaign trail often face political hurdles once Congress gets involved. Politicians quickly realized that eliminating a major revenue source like income taxes could create massive deficits and hurt funding for essential government programs. Investment. This is why historical attempts at radical tax reform usually end up as more modest adjustments instead of sweeping cancellations. History teaches us that while a president can inspire bold ideas, meant that the legislative process and the realities of governing almost always moderate those ambitions. Promises to cancel income taxes entirely belong more to the realm of rhetoric than reality. Investment, no matter how persuasive the campaign message. Now let's talk about what would happen if income taxes were actually canceled. At first glance, it seems obvious people keep more of their money, consumer spending rises, investment and the economy could get a boost. But in reality, the consequences are much more complex. Federal income taxes fund critical parts of the government: Social Security, Medicare, defense, infrastructure, education, investment, and countless other programs. Eliminating that revenue without replacing it would create enormous budget gaps. The government might have to borrow heavily, increasing the national debt and potentially destabilizing the economy. Interest rates could rise, inflation could spike, and investor confidence might waver. Additionally, income taxes are progressive, meaning higher earners pay more. Canceling income taxes would disproportionately benefit the wealthy, while the government might still rely on other forms of taxation that hit lower income Americans harder. Investment, such as sales or payroll taxes. This could increase economic inequality instead of leveling the playing field. So while the initial excitement of no income taxes is appealing, the economic reality is far more complicated. Policymakers would have to carefully consider alternatives to balance the budget and maintain public services. Without careful planning, the short-term benefit could quickly turn into long-term consequences that affect every American. Finally, let's consider whether this idea could realistically pass politically. The U.S. political system is built with checks and balances to prevent sudden, sweeping changes. For a policy like canceling income taxes to succeed investment, it would require not only the president's support, but also overwhelming cooperation from Congress. In today's divided political landscape, that level of agreement is highly unlikely. Public opinion is also a factor. While the idea of no income taxes is attractive to many once the implications, like cuts to public services, increased national debt, and potential economic instability are explained, support could waver. Americans tend to support reforms that are practical, gradual, and balanced rather than dramatic, all or nothing changes. Moreover, political opponents would mobilize quickly to challenge such a proposal, framing it as unrealistic or harmful to the country. Even within the president's own party, debates about the practicality and consequences would make implementation extremely difficult. The takeaway here is that politics is about compromise. Bold promises can excite voters and make headlines, but turning them into actionable, sustainable policy requires negotiation strategy and buy-in from multiple stakeholders. Without that, a promise to cancel income taxes remains a headline, not a reality. So could Trump really cancel income taxes? Legally, constitutionally, economically, and politically, the answer is overwhelmingly clear no. While the idea sounds exciting and taps into a common desire for financial relief, the reality is far more complex. Understanding these limits helps us separate political theater from practical policy, and it reminds us that meaningful change takes careful planning, compromise, and realistic expectations.